All right, Louis Porcelino Man Over Market, and today is Sunday, January 18th, and I'm just going to throw this out uh, before tomorrow. I'll do a little recap on this tomorrow, but I wanted to talk to you about what's going on in the markets and also talking about sort of a global influence that's going on. All right, just from a technical point of view, if you take a look at one, two, three, four, five lower closes, then we get two higher closes, then one, two, three, four, five lower closes. Now tomorrow is a holiday, and the pit is closed, but it'll be electronic trading, so it may be slower than we expect. But the key is going to be right here. So you see the all-time high up here at 28,875. This is the low that we made at 61 half, and that was December 16th. I drew a Fibonacci retracement between those two, and then I put this triangle based on the lows and so on. So we've kind of finally penetrated the bottom part of this triangle. So I'd be looking for another higher close, even though my sentiment going in tomorrow is still bearish. It's still I got a bias that's telling me that it's negative. And but this was could have been expected on Friday. You had 5 down days. You're going into Friday. People flattened out and so on. The high 2014 is still shy of some single prints, and then we made this high up here as 2027 the other day. So the key is going to be right here. Will we get a close that closes above the 50% mark? Will we get a close that closes above the 50% mark? If we don't, and we get a higher close, and we penetrate it, but we close below the 50% mark, all right, then I think that the market is going to go here, 61 half, before it goes up through here to all-time highs. So now this probably is you're looking at 46 half as a breakout area, 46 half to 52 probably. So that's going to be the key for the trading. Now tomorrow may give us a false key day, but if you take a look at this is a CCI that kind of measures momentum, which Pat has programmed. This is a proprietary, just like our pivots are. And if you take a look at this, it has not gone. This does not go from red, like this green area. It does not go from red. I mean, from green to red. It goes through a gray area. So, it's been in a buy, and we still haven't gone to a sell, right? So this is still giving you a positive on the upside, but it's in a gray area. So I think the tail of the tape is going to be here, the 50% of this move. Will we get a close above that 50%? And then if we do, then you're looking at an opportunity to make us move up and go touch the higher part of the range and possibly break out. So, while you're sitting around, if you're doing anything like I do on Sundays, sometimes I'm doing some charts. I'm going to get some other charts out too on the bonds. It's a really interesting thing in the bonds. The bonds basically have been, the interest rates have been going down, okay? And the reason the interests are going down is because I think there's a flight to quality going around the world right now, especially what happened with the Swiss franc and the Swiss leaving the euro and not marking taking the letting the Swiss franc float on its own. And I think you're seeing that people are buying U.S. bonds, and because they're buying bonds, we don't have to raise rate to attract them. And I think that you're getting a flight to quality. So I think that's why interest rates are staying where they're at, and the dollar's going up, oil's going down. We're getting a flight to quality to the U.S. market, and which is good for us. But it's also telling you that there's something looming out there, some sort of crisis. So I will show you the bond chart. Well, let me go here. ZB. So here's a bond chart. All right, day bond chart. it's the market has been going up, right? So when this market rallies, it's telling you that interest rates are going down. So and they're in a buy in a day chart. All right. And if you want to see something very interesting, just sort of, we call them shits and giggles, well, I'll show you this. And this is why it's always so important to trade with stops. Here you go. There's a Swiss franc, the move it made in 1 week. I think it was a 30% move up in 1 week. There are Forex firms out there right now that have multi-million dollar margin calls, and people have been wiped out because of the Swiss coming out and say they are going to let the Swiss franc float. So remember one thing: when you're trading, always trade with stops. Catastrophic stop. Put a stop in somewhere so that you don't get caught in this thing. But I don't even know if it would have helped here because people ran to buy the Swiss, and even if you had a stop, you probably would have got stopped out at the high because that's where you found sellers. Because remember, your stop becomes a market order. So, all right. So that's Louis Porcelino. I will be getting videos out on some oil stuff and gold, the bonds. I'm gonna start. Anytime I see something interesting. But here's the tail of the tape for us: the 50% right here, the 50% right there. Okay. All right, everybody. I hope you're having a good weekend. I'll see you in the morning. Probably a shortened. I mean, there's no pit trading tomorrow, but the electronic markets are open all day. All right. Talk to you later, and have a good day. Bye.